I was just typing song because they said like I trade different to everyone. Okay, right. So obviously this is the day that so this is it. By the way, let me just see if there's any sensitive info on this. So bear in mind this was a 10k funded account that I had run almost to blowage, let's say, so hence this lot size, but then I brought it back, as you can see, and I didn't take a loss until November, right? These were just little trades that I either just needed to execute in just to fulfill the like days or whatever. Presumably that was the case for this. Anyway, whatever. So I've already went through all the days up till the 10th of November. No, the 10th of, well, the 11th of October, I think it was. The 11th of October. Let me just see. So yeah. So what do I then do? I start by looking whether there's a higher time frame loom on this day, and in this case there is. So I'll cycle through the 4-3-2 day time frames and look at whether a recent bar close out of these time frames has closed on this day. Now then what I'll do is I'll look at what way that most recent bar closed the way it did amongst what consecutive bar pushes in play, and then also what at-hand pushes in play. Now in this case, it's clear that like at-hand push movements are like probable, like in terms of how clear they are of actually playing out. And then relative to the consecutive bar push, of course, it's just likely to fall off. But like just based on this wick rejection being proportionately larger than the opposing side, and then also being pretty much the same size or bigger than the body, basically same size. And then yeah, it's just in this case it's clear relative to the at-hand push and play what movements are expected to take hold. So I haven't even looked at whether it was a sell or a buy. Anyway, let's see. There's a 3-day. Oh wow. Someone say, so I'm texting someone right now, right, and he's saying like, I don't know why you buy and sell at premium zones. Right, listen to this. I'm gonna make a voice note. No, so the only reason that I would buy at an overextended region is based on whether market participants still are interacting with the underlying product at that region of prices in the way that shows that they're still happy with interacting with, for example, the buy side, or if it's at an overextended high region, and if that recent bar closes like nicely bullish and it's just likely to continue higher based on traders' interaction with the market at this region, and then that's backed up by all the other time frames, I'll then look for a setup accordingly. Now I'm going to turn my phone off and I'm going to get this done because I want to sit in the sun. I just need to do at least one day. Anyway, so yes, this is likely to go higher. Honestly, though, I would kind of have a look at 850 because like what I've learned is you don't want to be too lenient with these push 2 points, and if like because like the thing is, right, if you're not too lenient, and for example, that you then get down to the intraday time period of what sort of interactions going on with where the market sat at as of the price region the market sat at as of 7 till 10, and the 9 hour has closed at that region, like at this push 2 point region, whereby like from this region of the close, at least within this range of prices, you can expect market participants when given or provided or when they have the opportunity to interact with the market within this region, they're likely going to be primarily inclined towards interacting with the buy side of the market, within this region primarily over the course of that next 3-day time period. Same with the 4-day. And that's what sort of interaction you can therefore expect to go on with the underlying product's market, best bid, best offered, contract place at the best bid, best offer over the course of that next time period whilst the underlying product is sat at this region. That could take hold within the first 8 hours of this next bar, but then after that you don't really know what's going to happen because you can't really be sure, so but at least up to this point you can somewhat be sure. I mean, that's just, well, see, so it almost gets there, but you can almost be sure that traders are going to be inclined towards interacting with the underlying product being available to buy and sell at this region based on how market participants had most recently interacted with the market at this region in a similar fashion at these comparable prices to this region, at least up to this point. The 2-day would definitely suggest that little adjustment from 900 to 850 is fine. Honestly, let me just check this out. I would honestly probably go with this, or maybe I would go because what I've also learned is if it's a bit you're kind of being a bit unjust, then you can go a quarter. So you can go a quarter. I don't even what would this even be? Is that what, 25 pips? Let me just see. Yeah, so hang on. Bloody hell, I should know this, shouldn't I? So if you just go to 25, oh, okay, no, so it's 2.5 pips, okay. Because 10 pips would be that. Yeah. Oh well. So yeah, it's all right to do that. And then anyway, basically, then what you do? Oh, so this is the daily. Oh, hang on. If the 2-day was pointed nicely for that region, yeah. So I think that's a bit too unjust. So this would be the daily, but because the 2-day and the 4-day is still backing up this case, I would just be the daily is likely to extend to here. If this time frame chart that we've just seen was a loom time frame, meaning a time period whereby it's a large time period and whatever sort of intent to trade exists at the region the market startup being here, is looming at this price region regardless of how all the other time frames are set out, and that's likely to take hold if it's clear to take hold over the course of that next 3-day time period. So that's why I say loom, because you could let me just drink this. We'll slowly uncover it, but the 9-hour could be kind of pointing for higher, but then same with the 8, but then the 4 is kind of showing you probably want to wait for some sort of setup. The same with the 3 and the 2 and the 1. Well, still, regardless, that yes, the short-term pullback could occur, and you would not want to fucking buy if that was the case. You would want to wait for the market to set up appropriately, because if you just went in and straight bought, you could easily get caught on an offside of a retracement, right, and then take an unnecessary loss. And then the market then gradually ebb and flow its way up to here, gravitating to the probable push 2 point. Now, first of all, you can also see that at-hand pushes are most clearest here, to be honest. Consecutive bar push wise, you've kind of just got a nice wick rejection unfolding at the overextended low region of a consecutive bar push to the downside. That's overextended in both the ways that a push can be overextended, being counter quantity relative to the past push, and then also beneath previous consecutive bar pushes, range high or low, in this case low. And then you're also getting some retracement near-in signs relative to consecutive bar push terms. So a retracement relative to consecutive bar push would be the next couple of bars. So therefore, that's relative to the 12-hour time intervals of how the market's likely to be primarily interacted with over the course of the next few 12-hour bars. But I don't really go into that so much. I just go into how the prices that are available as of 7 are poised to be interacted with, and what sort of intent exists relative to the daily and is likely to exist at these prices that the market set at, and then back that up with all other time frames to see whether that sort of intent that for example in this case we've established 12 daily 2 day, 3 day, 4 day. This is a midday. Because you've got so many time windows offering you insight into what sort of way traders are willing to deal with the underlying product at this region of prices and how they're willing to trade, showing in the price action what's unfolded up to this point at this region. Like at this region, and then obviously like if you then back that up with, for example, like the 9 hour, which we need to go to, like that holds even more like significance. I need to put some moisturizer on if my face feels like. There we go. So if you then back that up with all of the time frames of like honing in on how like they're likely to be, if like for example that same region of prices relative to the like 3 hour, 4 hour, 9 8 bar closes relative to the daily are still also be poised to be interacted with in a certain way, which they're also poised to be interacted with relative to 3 hour time periods. Well, then it's just likely to go in that direction in terms of how traders are likely to trade the underlying product at the region it's sat at. So, and like I also am at my part-time job. Today I'm not gonna. It's just Aldi. Yeah, I was gonna not disclose it, but I mean it's not really any weirdos on here, so yeah, it is what it is. So yeah, we're in at 1 today. We're only in 3 days a week, and to be honest, it's kind of good. I genuinely do like it. It's a complete different dynamic, and it also takes your mind. Look at this. So it also takes your mind off like this, and also lets you consolidate certain things. So the most important time frame out of the 9 and 8, 4 and 3 is the 3 and 9, right? But you still don't disregard, for example, what the 8 hour shows, because that bar is a large time segment that really encapsulates 7 till 10 and still closes at the region the market sat at as of 7, right? It closes at 6, but like still it's the same sort of region. Now, we've established that yes, this region is likely to be poised bullish, right? I mean, I just had to take a sneak peek. It doesn't matter, like I deal with the market how it's set up as of like real time emulated conditions. Like I don't look at this and be like, oh yeah, this is what I do, because like that's just not. I mean, why? You're just tricking yourself, and it'll come through and materialize in bad stuff. So anyway, you see an icebreaker rejection to the downside, so it looks fine to go higher, right? But still, it's a bit iffy. I don't know why it just looks a bit iffy, but that is fine. It's suitable. Then the 8 is pointed straight for lower. Then the 4 is definitely pointed straight for lower. The 3, it is okay. This is okay to go higher. The 12 hour, I think in this case, I mean, look, it's like, you know, even this, it just looks good to go higher. The 9, the 8, it definitely, the 8 is bearish. It looks good. I mean, no, it doesn't, but see, this is what I mean. I emulate real time. It looks good to go to about 25, 425. I think this is worthy of being marked, to be honest, because like it's quite strong, that, and you look at this consecutive bar push it downside. But then the 4 hour, just well, what do you know? It just shows the same sort of thing, and then the 3 hour, it's kind of bullish, to be honest. The 3 hour, and then the 2 hour is like that. So it's kind of contingent upon how the 1 hour set up here. And if that, oh wow, okay, so on this day, based on all the other time frames, even though the 8 hour and 4 hour is bearish, based on the 9 hour bullishness at this region and also the 8, it would be okay to look for an Irish sell QS off the bat. But like, I've recently been doing this, and something doesn't feel right, and I think the reason how I've been I've came to this stupid thing of oh yeah, well it's fine to come for it to set up off the bat, is and you see I mean, because you would also then look to the left, and then I would probably go for 12.5, to be honest. Yeah, I would go for about 12.5, just basically, to be honest. Actually, that's just, so you go like this, and you go like this, and then you go about here. I would probably just go about there. So yeah, and then anyway, what I've been also thinking of is just targeting 2R. If if there's a push 2 point, if the push 2 point that we've got marked up, the most extreme one is here, right? And well, you would just target that. But then if the push 2 point is here, and that's way past 2R, you would just target 2R, right? So that's what I've been kind of thinking of recently, to minimize the impact of losses, because obviously with a risk to reward of 1-to-1, you really need to be on your A game all the time, and not always will you be. I'm not sure why the sessions aren't showing. Okay, now. I swear I saved that as that yesterday. Bloody hell. I really don't know, to be honest, because the thing is, when you've got the 8-hour, that is a trade that you could take, and on this day you would have obviously got away with it, right? But the only reason I would be yeah, okay, you could kind of just look for it off the bat is because look, I'm emulating real time here, right? So if you just go into the 4-day again, now the 4-day looks fine to push there. The 3-day backs that up pretty nicely. The 2-day, it does back that up nice, but to be honest, I would definitely decrease it to 25, just based on the 4-day not being that clear, but still being clear enough to warrant looking for something. But then, to be honest, nah, I would keep it 50. Yeah, that looks fine. And then 3-day, yeah, it definitely backs that case up. It's likely to just follow through in the 4-day direction. Same with this. Daily, that looks really damn good. I think it's also just because my confidence has been a bit knocked recently, because obviously we've been a bit battered recently, with losses. Obviously we took an invalid trade the other day. Yeah, and basically also, the reason why I don't mark up this is because this just backs up the direction of the market pushing to this point. So I'm yeah, well, if the 4 days also poised at this region and push here, then it's likely to probably do so, right? And then when you get to the 9-hour, the 9-hour set up like this, but then the 8-hour set up pretty bearish. But then, you then discover the context of this, potential bearishness unfolding at this region. The 4-hour backs that case up. So, as of this point, you'd be if the 3-hour was a bit primarily bearish, then you would want to just see a nice, and then well, it would be just based on the bullishness case, and then the 3-hour was kind of bearish. You would probably just want to see a 1-hour close from prices better than those available as of 7. But if the 3-hour was definitely bearish, then you'd probably look to either the appropriate fib pull, or below Asia low or something, or for example, if I think on this day you had already swept Asia low, so then you could just look for again a below that low. But here, this is just bullish, this is just bullish. And in the 2-hour, yes, it is likely to go lower, but the 3 and 9 with then the daily and stuff, and then the 1-hour kind of set up like this, you would probably be fine to you would definitely want to just look for an ISLQS off the bat, but then you would probably factor in the stop loss with what potential bearishness there is poised to possibly take hold. So I'd maybe I'd probably place it about here, but like this is definitely fine, like just 50% of this wick, that's what I'm looking at. But like this is definitely fine. And then do you get 2R? Yes, you do. I think that's quite a big position, to be honest. I mean, even the 1-to-1 was quite a large amount of price movement. So like maybe even in like in the context of like a big stop, maybe just go for like you could even get the context of like a helping hand with, like, for example, when you've got a daily big, like basically what I'm doing is I just completely hypothesizing of how I could possibly minimize the effect of losses, right? So instantly when I go to like when I mark out like based on how this recent bar closed and what momentum is likely to follow through within the next bar, 7.5, let's have a look at just based on the context of the day of like the 4 and 2 day, with the daily then set up like this in terms of how trades interacted with the market at this region, the market was set up relative to the daily and how it was like seen as of worth to interact with. Like it enhances the case of like this daily movement. So if like we just had the daily, we would just have about like probably this, but like because we've got the lumen intent around this whole region, you could maybe be a bit more lenient, and I would probably go about 7.5. I wouldn't really want to go any more than that. So then basically what you could do is then you could just target the, like in a big stop case scenario, you could just target here, like the daily probable push 2 point, and then there will go, that's better than targeting 1.5. But like, so like in this case of a big stop case scenario, then look to target the daily loom, because like I'm like it's just like, with my experience, even with these large stop losses and stuff, it's like it's still a big move to go here. So I wouldn't, I would even be a bit wary of going 2R here, let alone here. Obviously that would have been a bit of a shit thing, but like let me just see what the next trade is. I'm probably not going to do anything else. So it was Euro USD, and it was on the 3rd of October. So let's see. I mean, I just out of pure curiosity, let's see what happens. So you'd be holding for a while, and then damn, that would be absolutely so good. But like, I mean, that, like, also you kind of expect like the market to like, you know, like that this is sort of intent. It basically got to this region. You know what I mean? It's like you're not exact with everything. Oh, I expected to come here. No, it's like this region from the most recent bar close. So it closed here. You could expect this region of prices, like this territory, to be met with primarily bullish intent, based on whoever was operating recent behavior at this region, you know, and how they had been willing to interact with the online product here. So yeah, I think in this case, like when you've got a big stop, like and you've done or maybe you could just make it like a rule, like if, you know, if. I don't really know. I think because like you don't really want many things. You just kind of want to like me. I'm best when I just flow, right? And I think here, right, it's just like, yeah, okay. So you got some potential bullishness here, but it is all right to look for a nice LQS off the bat. Now, you get the SABC right as of 7, and you just enter, right? And then the stop loss placement method is obviously, you know, you'd mark out the lower hand, and then you go to a whole price digit, that's 10 pips, but then obviously you've got the slight bullishness that's here, so you kind of want to give some room, and I would probably go for about half of this wick, because obviously then you're seeing where that comes in with the price action to the left. You know, you're coming in at around half of this wick. What does 15 pips look like? Yeah, I'll just go half of this wick, right? You might be thinking, well, that's a bit particular, isn't it? Well, yeah, it's what it is. And then anyway, you see that relative to the price action, this is a large amount. You know, obviously some price relative to the volatility that goes on, 15 pips might look small, but in this case it looked big. So then you would just target the daily loom, right? I think that would be the best case scenario, or it would be 1.5 hour. Like, you know, I think 1.5 hours fine. But I would just go in this case for the daily probable objective, purely based on the fact that, you know, it's quite a big amount. It's quite a large range for for pound and euro on this day, just based on my intuition, of like just my feel. It's kind of weird, but like, you know, a 1-to-1, you're like, yeah, okay, sweet, that's definitely achievable. But like even I would say 1-to-5, 1 to 1.5, that's also fine. But like 2R, it's like, yeah, it does go there, of course, but like, oh, it's a bit of a stretch. That I just feel it's a bit of a stretch. So it would be best, probably in my opinion, to go for this. So yeah, there we go, and yeah, we're gonna leave it at that, and I'm probably gonna do one more.